Some investors are already relying on AI to decide where they're putting real money. So the question isn't if AI will change real estate investing, but how much it already has. For decades, real estate investment has followed a simple formula: buy in a growing area, hold or rent, sell when the market peaks. Behind that simple model was a huge amount of manual work. Investors had to pull local comparables, study tax records, talk to brokers, and hope their assumptions held up. Timing was always difficult. Risk was hard to quantify. AI changes the structure of that entire process. Real estate, like every other asset class, is now data rich. That means it's fertile ground for machine learning. As of now, investors are using AI tools across every part of the real estate process. From forecasting home prices to estimating rental income to evaluating neighborhood risk, sourcing off-market deals, and managing properties after purchase, i.e. nim chak yor sija a falada tokat. It's changing how investors think about strategy. And it's already shifting how capital is allocated in residential and commercial real estate. One of the most advanced areas, price forecasting. Investors need to understand not just how much a home is worth today, but how much it might be worth 3, 6, or 12 months from now. Zillow's updated models use machine learning trained on millions of past transactions to forecast home value trends across local markets. As of this month, Zillow forecasts that home values will drop modestly by the end of 2025 due to rising supply and shifting demand. This kind of forecast isn't just anecdotal. It's based on property-level data, regional economic indicators, and historical cycles. House Canary uses a similar approach but targets institutional users. Its platform offers valuation models and forward-looking analytics for over 100 million residential properties. These aren't static estimates. The system continuously updates as new market data comes in. Investors use this to decide which properties to flip, which to hold, and where to deploy capital for the highest potential yield. Zuno is another tool that builds dynamic forecasts, particularly for urban markets. By looking at mortgage trends, renovation patterns, and neighborhood mobility, it can identify where price momentum is building or slowing. Together, these tools reduce the need for guesswork. They let even smaller investors benchmark expected returns against large-scale market movements. You don't need a local broker or 3 months of research to understand if a neighborhood is cooling off. The model shows you. Forecasting rent is just as important. If the property is being held for income, investors need accurate, up-to-date estimates of rental yield. That means not just knowing what current tenants pay, but what the market will support over the next 12 months. AI-powered platforms like AirDNA do this for short-term rentals. Their system analyzes real-time booking data across over 10 million Airbnb and VRBO listings. You can input a specific address, and the tool shows likely revenue, occupancy rate, seasonal demand swings, and how the home compares to nearby listings. This helps investors avoid high vacancy markets and overhyped tourist areas. Rabu provides another angle. It offers a calculator built on comparable listings in your area, showing projected annual income, expected booking nights, and ideal nightly rate. What's useful here is not just the forecast, but how granular the data gets. You're not looking at county level averages. You're seeing how similar homes with similar amenities perform in the same zip code. In the past, this would take hours of spreadsheet work and phone calls. Now it takes under a minute. And for long-term rentals, tools like Mashvisor combine market rents, taxes, and mortgage rates to show which properties meet specific return thresholds. You can filter for cash flow, cap rate, or projected appreciation. That means the software helps answer a question every investor asks: is this a good rental property? With machine learning sorting through thousands of inputs, The results are more consistent and usually more accurate than just gut feel. Aside from rent and pricing, AI is also changing how investors evaluate neighborhood risk. It's no longer enough to look at a few indicators like school ratings or proximity to downtown. Risk is now multidimensional. Local Logic has built a massive location intelligence platform that includes 250 million properties across the US and Canada. It scores areas based on walkability, planned development, transportation access, zoning changes, and much more. This allows investors to see how livable and scalable a location really is. Reevaluate scores areas based on social indicators like tenant turnover, code violations, and local sentiment analysis. It helps you avoid properties that look promising but are located in markets with unstable dynamics or hidden risks. For investors buying remotely or in unfamiliar cities, this information is essential. The old method of asking a local agent for their opinion doesn't scale. AI does. It makes evaluating 20 zip codes as fast as evaluating one. Now let's talk about how AI is helping investors find deals. This is usually the hardest and most time-consuming part of the process. You have to sort through hundreds of listings, identify potential value gaps, and act quickly. Roofstock automates much of this. It flags properties based on cash flow potential, rent-to-price ratios, local supply-demand balance, and buyer preferences. The platform serves both institutional buyers and individuals looking to build a rental portfolio. Its AI engine prioritizes deals that meet predefined financial rules and alerts you when those listings appear. Deal Machine is another powerful tool for sourcing undervalued homes. Its app uses image recognition to analyze property photos and flag signs of neglect or needed renovation. Things like overgrown yards, broken gutters, or outdated interiors are indicators of distressed properties. The system then helps you contact owners directly, even if the property isn't listed publicly. That opens up access to off-market opportunities with less competition and more upside. Zillow itself is integrating more AI into search and recommendation engines. It's not just returning listings. It's suggesting homes that align with your behavioral patterns and investment criteria. The more you use the tool, the better its recommendations become. For busy investors or those scaling their portfolio, this creates a constant deal pipeline. Once a deal closes, AI keeps working. Property management used to be a manual process, especially across multiple units. Himlane changes that with automation. The platform manages rent collection, handles maintenance requests, and monitors lease compliance. It can notify you when a tenant is late, generate reminder emails, and schedule repairs with verified contractors. This allows owners to manage properties across state lines with minimal effort. DoorLoop does many of the same things, and it adds smart contract integration. This means that lease agreements can be stored on-chain, and rent payments can be verified automatically. For tech-savvy investors, or those using real estate in tokenized portfolios, this is a natural next step. It also reduces fraud risk and makes record keeping more transparent. Still, every tool has limitations. AI predictions are based on probabilities, not certainties. A neighborhood that looks promising on paper might face unexpected local issues. A tenant who looks great on a screening tool might cause trouble. Regulatory pressure is growing as well. Tenant screening tools powered by AI are under scrutiny from housing regulators due to fairness and privacy concerns. Investors have to understand the boundaries and ethical use of these technologies. There's also the risk of confirmation bias. If your AI tools are set to prioritize cash flow, they might overlook high growth areas with lower short-term returns If they prioritize historical rent stability, they might miss emerging neighborhoods. The best investors use AI to supplement, not replace, human judgment. What's clear is that AI is no longer a bonus in real estate investing. It's quickly becoming the foundation. Whether you're flipping a single property or managing a portfolio of 50 rentals, these tools are helping investors make faster, smarter, and more data-informed decisions. They can't promise returns, but they can reduce friction, reveal hidden opportunities, and help you avoid costly mistakes. If you want a full list of the AI tools mentioned in this video, including links to try them, check the description below. What do you think about the role of AI in real estate investing? Let me know in the comments below. And if you found this interesting, don't forget to like and subscribe for more videos like this.